Start recording.
Should be good to go, Steve.
Thank you. Okay. Welcome, everybody. This is our second webinar on the PPP Flexibility Act update. Thanks for joining us today. We're going to go ahead and get started. I'm going to just make a few notes here as we get started. Please use the chat function to ask questions. And when you post a question, post them so everyone can see them. And then as we get through the presentation to the question and answer part, we will address those questions as they come. Last time we had quite a few questions. If we don't get to all the questions, we will be posting them on an FAQ that will be available after the presentation. And just a note that a copy of the recording and the slides will be available after the webinar on our COVID-19 page on the Oregon SBDC website, bizcenter.org/COVID-19. And then Noah, I set up a slide here. Do you want to just go through and do some introductions of folks, of who's on the call with us? And maybe before I turn it over to you, I'll just note that who I am. I'm Steve Curley. I'm the Associate State Director for the Oregon SBDC Network and helping to facilitate today. So I'll turn it over to you, Noah.
You bet. Thanks so much. So good afternoon. I guess it's noon o'clock. Welcome, everyone. I'm Noah Brockman. I lead the Oregon SBDC Network's Capital Access team. The last 9 years or so, we've been working with SBDC clients on assisting with accessing capital and finance strategies. Over that time period, I think we've assisted clients to gain access to, I think, just a little over 140 million in capital for that 9-year period. We are a team of individuals geographically located around the state, and we have several individuals on our team who are retired bankers or ex-bankers working with us. So just a little bit about the Capital Access team. If you want to learn more, you can go to bizcentercat.org. That's CAT. So we have with us today a CPA, Jordan Dolly, from senior accountant from Jones & Roth. Jordan, did I get your last name correct? Oh, you're still muted. So
it's like dolly if you're going to help somebody move, right? Like a moving dolly.
Like dolly. Okay, perfect. Thank you.
Yeah.
So Jordan is going to give us a CPA's perspective on the updates on the PPP, which will be great. We look forward to that. Before we go there, let me just introduce, we also have with us again, Marty Golden, SBA District Director from the Portland District Office. Welcome, Marty.
Thank you very much.
Yeah, thanks again for making time to join us today. And we also have with us my colleague, Eric Lind, who is himself a retired banker and works with us on the Capital Access team. And he is in the Willamette Valley, Region 2 out of Eugene. He's our PPP expert on the team. Eric, thank you for joining us.
Thank you. I don't know about PPP expert, but I've heard of it. Thanks.
You've heard of it, yeah, a little bit. I know you've heard a lot about it. So Eric and I are going to do our best to manage the chat questions with some extra help from Steve where we need it. So we'll be calling through the chat questions to call those out to Jordan and to Marty. So help us out, if you would, by trying to keep your questions somewhat concise. Those we found are a little easier to get through. And also, if they're a little more general, that would be of benefit to the whole audience, that would be great too. So with that said, let's go ahead and Jordan, take it away and let's hear what you have to share about the Flexibility Act update.
Yeah, that sounds great. Well, everybody who's involved in this, who's following this closely at all, has seen this evolve over time, right? This has been something that's rapidly evolved. We do blog posts on our website, at our firm to kind of keep clients, prospective clients, aware of what's going on. And for me personally, it seems like every time I draft an update, a new update comes out. So it's ever evolving. So I'm just going to walk you through the most recent update, which is the PPP Flexibility Act. So if you go to the next slide here, please, and let's go one more. So yeah, as he talked about, we're going to walk through the update and then we'll open it up to some questions and answers. That'll give you a chance to have some of your questions fielded, and hopefully we can come to some good responses for you. Though as the accounting profession, we always like to say, right, a lot of answers depend, right? So you might ask a question and it might depend, circumstantial. So keep that in mind. We'll definitely try to steer you the best we can. So June 5th, President signed into law the PPP-FA, right? The program started as the Paycheck Protection Program, the PPP, and my inclination is by the end of this, we're going to have the whole alphabet involved, right? So we're already getting up there. So the PPP-FA was the most recent update, which is the Flexibility Act itself. And there's some main provisions in there that help this out. The main provision being it shifted from an original 8-week usage period to now a 24-week covered period. The 24-week covered period is a default if you received your loans after June 5th. If you had a loan, PPP loan before June 5th, you can still request from the lender to have that extended to a 24-week period, but that is up to their discretion. One of the other big changes was the payroll cost requirement, right? That was originally a 75% requirement. That was lowered to 60%. And further, it was originally thought it would be a cliff. If you didn't at least spend 60% on payroll, then you would get none forgiven. But that's not necessarily the case, right? It'll be prorated depending on how you spend those funds. So we just have a brief example talking about essentially if you received $100,000 in PPP loan and you spent $54,000 of it on payroll costs, the maximum loan forgiveness amount would be $90,000. And that just takes your $54,000 in payroll costs divided by the 60%. And then furthermore, extrapolating that, right, you'd have $10,000 of that PPP loan that would be considered a loan repayable by those terms. So let's go ahead and go to the next part here. So originally, right, so I drafted these again earlier in the week, and last night, as you know, the Senate and the House came together and they approved an extension of when funds were available to be requested. It actually goes through, well, it's out on the president's desk waiting for signature. They're likely going to be signed anytime now, but they're working on pushing out the availability of funds. There's about 129 billion as of my last reading available. And rather than Tuesday being the deadline, June 30, they're proposing a August 8th, 2020 deadline. So it kicks it out another 6 weeks to hopefully give people who need those funds availability to grab those funds. So keep in mind when that's made final, right, there'll still be funds to get. If you haven't got them, there's still potentially some out there for you. Another PPP-FA update that came through was the date when you had to rehire, restore compensation for your employees was originally June 30, and now it's again pushed back to December 31, 2020. And that comes into play with your reduction, your FTE reduction safe harbor. So ultimately that boils down to as simple as, you try to meet during your covered period, restore your full-time equivalent employees to your pre-covered period. That's ultimately the goal. If you're not able to get there and you don't meet the safe harbor requirements, there's potential that your forgiveness amount will be reduced. Another change was the loan repayment. So any portion that's not forgiven is a loan. The loan repayment was changed from 2 to 5 years, and that's been extended on with the PPP-FA. And then again, and then it says here, right, unless the mutually agreed upon with the bank, the rule extends loan and principal interest requirement for 10 months from the end of the covered period. And the interest on that loan does accrue during those 10 months. So some additional interim rules that came out from the SBA and the Treasury Department themselves on June 16th. They came out with a new form, which was the easy application. That's a simplified application you'll be able to file if you're self-employed, independent contractor, or sole proprietor with no employees, or if you had no reduction in wages of more than 25% during the covered period and your headcount didn't decrease, or the business experienced reductions in business activity as a result of COVID-19 directives that was not, and there was no reduction in wages by more than 25%. So if you meet one of those, you can file the easy form. Further rules, right? Since they changed it from the 8-week to a 24-week period, they had to adjust compensation to match that. So owner employees, self-employed individuals, or general partners are capped at the lesser of $20,833 for the full 24-week period. The original cap was $15,385. That's still in place if you use the 8-week covered period. And that's one of the key provisions they introduced with the easy application. Now with that 24-week period, the maximum compensation for employees as a total would be $46,162, which works out to $1,923 per week, plus retirement benefits and health insurance benefits, insurance premiums paid on their behalf during the 24-week covered period. Now, as you know, right, this has evolved a lot, and there's some still really important things that we don't quite know yet, especially for us on the tax side of things. We're still waiting on clarification on what will be included in utilities and non-payroll costs. Specifically, we've had a lot of clients ask whether automobile gas will be included. It mentions fuel, but it's not specific as to whether fuel for a vehicle qualifies or what specifically that entails. And then furthermore, they didn't fully explain or define what's considered an owner employee. That's also an important distinction that we're waiting on clarification for. And then lastly, and the biggest part, right, is we're waiting to find out if the costs that are paid with forgiven funds will be tax deductible, right? Because for a lot of businesses, payroll is one of their biggest expenses. So if they no longer get that deduction, right, that changes some of the planning and potentially some of their tax liability come into next filing season. So a lot of items still out there. We do know a lot more now, but certainly, as the weeks go by, we get more and more clarification. We're waiting on more examples to come out in terms of unique situations. There's been business closures during this time. We're waiting to see, some examples on how that'll be handled. But ultimately, that's where we are at today. Again, we're waiting for that extension of those funds. The funds are there. We're waiting for the date to be extended so people can still request funds. So that's the brief update I had. So I think we're at a good spot to open up the questions, unless you guys had anything specific on the panel.
Well, that's a good start, Jordan. Do you, I wonder if you can, and you may not be able to at this point because it's pretty new information, but as far as what was passed through the House and Senate yesterday, what they're calling the P4 or the Prioritized Paycheck Protection Program, which essentially opens it up for a second round for some qualified small businesses. I'm wondering, are you able to chat any more about those details that act, if signed by the president, which he probably will, opens up for people, or maybe we need to,
I know
fill in any blanks there?
Yeah, I know the priority, on my end, I maybe the gentleman from the SBA can speak more on that, but I know from my end, right, it sounds like the priority is going to be, to those in greatest need, however they define that, right? But like you said, yeah, there'll likely be a second round available for those who qualify, as well as funds for those who hadn't yet applied or were unsure how to do it, right? The funds are there. So, even if there is a portion non-forgiven, the interest rate's great. So we encourage people, to pursue that, because there's very few businesses that I've come across that have not been impacted in some way, right? Unless you're making toilet paper, this has been a big change for everybody. So it's definitely a great opportunity. And but that's one I definitely think we should wait for a little more guidance, so it's specific as to maybe the levels of priority with the remaining funds.
We haven't been given any guidance at all about this in the field yet, but that's not unusual. So once the president signs it, we'll start getting communication messages.
Fair enough. I figured as much, but I thought we've got you guys on the line today, so we should definitely ask. There was a question about, they got a loan prior to June 5th. Can they use the 24-week covered period, or is it 8 weeks mandatory? Jordan, I heard you say that that's at the discretion of the lender and they need to take that up with the lender in that case.
Correct.
Because they did have a loan prior to June 5th.
Yeah, that's correct. So any
So
loan.
I'm going to ask the next question and then I'm,
Wait a minute.
okay.
I'm not sure if we're mixing up two things. The company can choose which period it wants to use, but it cannot extend the loan to 5 years without permission. You
Okay,
understand?
yeah, so just to be clear, the question was that somebody got a PPP loan prior to June 5th, and they just wanted to know, with that loan prior to June 5th, could they use the 24-week covered period instead of 8 weeks?
Yeah, if they want to, they can use the 24 weeks.
And they just, don't they need to get sign off by their lender in that case?
No, I don't think so. Jordan, do you understand something different?
Yeah, I understood it that any loan received prior to June 5th, it's up to the lender whether they're able to use an 8 or 24-week period. But I know for sure, like you mentioned, the 2 versus 5 year, right? The 5 year period of the loan, it is a requirement that you need to clarify that with the bank. That's fully the discretion of the bank. So yeah.
Well, I would recommend,
Yeah.
so this is a great example of sometimes the confusion that surrounds this. Everybody involved in this, whether it's myself or Jordan or anybody else, is looking at the IFRs, trying to make an interpretation of what they're being said.
Mm-hmm.
And so what's important for businesses to do is to make sure that they're reading the IFRs as well.
Mm-hmm.
And because at the end of the day, they need to make an interpretation of what they think it says.
Yeah.
And make their own decisions. And all those IFRs and changes are all compiled on the Department of Treasury website.
Mm-hmm.
So it's a good example of why you guys need to be looking at that as well.
Yeah, and ultimately, right, the goal is to use as much of the funds as possible, for payroll, essentially, to limit the ability for them to potentially handle some of the loan, to treat it as a loan rather than be forgiven. So if you use the full 24-week period, ideally, right, you'd be able to use all those funds on payroll, and then you wouldn't be subject to any limitations. The concern, right, if you shorten to an 8-week period and there's further modifications or other quarantine, not considering any other changes they might make, perhaps there's less payroll available there for you to pay. So there's potentially more left over or more non-payroll costs mixed in. So that's just a general consideration to have there.
So a question, if a business selects the 24 weeks, the 24-week covered period, and they use the funds, they exhaust the funds prior to that, say 16 weeks, when can they apply for forgiveness? Can they do it after the 16 weeks, or do they have to wait for the 24 weeks? Marty, do you want to handle that?
Sure. No, they can. So the SBA would like to see them apply after the whatever period of time it takes them to expend those funds. Having said that, a lot of the banks aren't yet taking applications. The SBA has not given forgiveness applications. The SBA has not yet given complete guidance to the banks on how they're supposed to process those forgiveness applications. So the position many of the banks are taking, because they have a 60-day clock, is to just not take forgiveness applications. So while we would recommend that businesses try to apply for forgiveness as soon as their period is done, it's going to be reliant also on the bank's willingness to accept those applications.
Is it also true, right, Marty, about the expectation of timeline, right? You have 60 days on the clock with the lender as well as 60 days with SBA. So there's potential for a 4-month turnaround in terms of when
It's actually 90 days for the SBA. So
you're 5 months then. Yeah. So
you have a business has the timelines can be incredibly long. you have 10 months from the end of your covered period, whether your covered period is 8 weeks or 24 weeks. Once that covered period ends, you have 10 months before you have to apply for forgiveness. Once you apply, the bank has 60 days to turn it around. Once the bank sends the forgiveness application to the SBA has 90 days. So you're talking about quite a long time there. Now, we expect that most of those forgiveness applications are going to be automated. So I'm not expecting that the bank's going to take 2 months to turn it, nor the SBA would take 90 days. And then you have to set a amortization period once the SBA has given the bank a yay or nay on the forgiveness. That's when they set the amortization period, which will extend into either 2 years or 5 years, depending on what it happens to be.
Question here about spending out all funds on of the loan on payroll. So if someone spends out all their PPP funding on payroll, does that impact in any way? Well, can they is the first part. And if they can and they do, how does that impact loan forgiveness? Could they potentially get it all forgiven?
Yeah, they can certainly spend the whole thing on payroll. In fact, that was really the intent of the program originally. The entire thing could be forgiven unless they got an idle advance, in which case whatever advance amount they got would be subtracted from the forgiveness amount.
Okay, so there's a question regarding FTE calculation. Says since we can now use the money over more than 8 weeks, what is the date we use for our final FTE calculation, and how is that calculated?
Yeah, so that would be the end of the covered period, which would be, using the full 24 weeks would be the December 31 of 2020, or when you exhaust the funds, right, and you're applying for forgiveness, at that point you would perform your FTE calculation. I see part of the question below, right, is about you have to bring on employees back full time, and know that the FTE, what that stands for is full-time equivalent, right? So an employee who works 40 hours a week would be counted as 1. An employee who works part-time, say 20 hours a week, would be 0.5. There's also a simplified method. The simplified method boils down to anybody who works 40 hours or more is considered a 1 full-time employee, and anyone who works less than 40 hours a week would be considered half a full-time equivalent. So those considerations there. That's basically you capture that count, the FTE count, and you compare that to your non-covered period, right? That includes the February 15th, 2020 payroll, right? So essentially you're comparing pre-COVID count of employees to, what it was during the end of your covered period. That's how you arrive at your FTE reduction quotient.
So Jordan,
Good. Thanks.
What if you have an employee that doesn't want to be full-time anymore? They used to be, but now they want to be part-time.
Yeah.
How is that going to impact your forgiveness calculation, or does that fall under the safe harbor if well documented?
Yeah, great question, Brock, or Noah, excuse me. Yeah, it actually does not count against your FTE count. There's safe harbor provisions specifically for situations like that. Whether it's an employee that you have documentation that you've offered them to return to full work as they had pre-COVID, and they refuse that, right? That does not count against your calculation, as well as employees who refuse to come back full-time. They only want to work certain hours. So both of those fall under the safe harbor provisions, and they do not count against your FTE count.
And pardon me, and doing another flavor of this, someone's laid off, and then and then a new person is rehired to backfill that position, but they're making less money. How's the forgiveness look at it in terms of, well, yeah, you restored that full FTE, but the compensation's less. Does that impact forgiveness?
I don't believe it does, since it's a new employee and they wouldn't have had base wages to compare to. If it was apples to apples, it was the same employee and their base wages were increased more than 25%, then at that case, it would count against you.
Okay, thanks.
Mhm.
Another question, how do you apply for forgiveness before December without knowing what your FTE will be then?
Yeah, you'd want to capture it through the end of the end of the time period where you use the PPP funds, right? So if you fully exercise and use all the funds through, say, the end of October, you'd want to capture your FTE count at that time.
Right. I think, Jordan, what it says is that you just have to restore FTE no later than December 31st. So it could be any time before that.
Sure. Yeah, that's a good clarification.
Just right. Well, no, you said it perfectly. Another one, this salary doesn't matter, just FTE. Can you address that, Jordan?
Yeah, so they also look at whether wages were reduced more than 25%, right? If you had an employee pre-COVID who made $10,000 a month, and after that, he made $70,000, obviously that's a greater reduction than 25%. And so that essentially would count against you in the FTE requirement, right? Because although you potentially have a full-time employee back, his wages were reduced more than 25%. It's spelled out, right, that you need to, you can't reduce wages more than 70 or 25%, excuse me.
Right. Good. Thank you.
There's a question there that says, can it be either 8 or 24 weeks, no in between? And yes, you can be in between. So it can be any number of weeks in between 8 and 24.
Can you expand on that, Marty? Like why someone might do less? Let's say they need more time than 8 weeks, but they don't need 24. So some circumstances might lead to that.
Sure. I mean, the one that occurs to me is, and this goes back to a lot of businesses complaining that there was no point in hiring people back if it didn't open. I think they just want to pick a time period. So it's not that you would use your loan over 24 weeks. It's that you might not hire anybody until week 12, and then you put them on for 8 weeks through week 22. So I believe it's giving companies the flexibility to start the clock anywhere in between, let's say, 8 and 16 weeks, or 0 and 16 weeks.
Okay. Yeah. Good clarification on that. Thank you.
Another one, do you recommend having our CPA look over our forgiveness application prior to turning it into the lender?
Yeah, it depends on your CPA in terms of the liability involved with that, right? I know for us, we send clients a disclaimer letter if we're involved in their PPP administration. And we're getting a lot of pushback from banks, right, that they don't want to be responsible for reviewing the documentation and helping them fill out the application, right? They want the final product. But for us as CPAs, right, it's a slippery slope because the AICPA, the American Institute of Certified Public Accountants, specifies that we should not be in a role of actually preparing the applications themselves. We do, assist in the calculation and the support, that helps them arrive at the final application. So depending on your CPA, they might be welcome to review the application or assist in the calculations that, result in the final application. I know it's a small qualifier there, but it's important in the profession, what we're allowed to do by professional standards. So yeah, certainly I would check with your CPA and see what they're comfortable with doing or what engagements they're taking on to accomplish that.
Okay, I'm going to try and couch a question here and add a few details to give it some context. So the question is, how do you apply for forgiveness before December without knowing what your FTE will be by then? Maybe you get a loan later, or maybe you're one of those businesses that can't really hire people for a while given what's happening in the economy. Maybe you're a restaurant or something. But let's say your funds run out before December. So you're looking at the December 31 date. and you're trying to figure out, I guess you got to wait to figure out what your FTE would be before doing the forgiveness application?
No, I think Eric actually clarified it a little better, is that you have to at least by the end of your covered period, right? So if you use the funds before, like by the end of October, and you've fully restored your FTE by the time you exhaust the funds and you're ready to prepare your application, I believe that'll be your final FTE count with relation to your forgiveness.
Here's another question regarding FTEs. If somebody doesn't want to come back and doesn't count in your FTEs on the application, is your FTE reduced by 1? In other words, FTEs of 100 becomes 99.
Yeah, I don't recall the exact line number on the application, but there's a section where you capture those employees who meet the safe harbor provision, and it factors into the actual calculation itself. So there is a specific line item on the application where you identify, you know, employees who refuse to return to work, or those who refuse to, you know, return to full hours that they were offered. So there's a specific line for it.
Isn't that
Okay,
the
thank you.
Is that the FTE reduction exceptions in the Schedule A worksheet maybe?
Yes, that sounds exactly right. Yeah, it factors into the reduction quotient, and there's a line specific in that calculation section where you list the number of employees, right, that meet that safe harbor provision.
Okay. And this might be a good Marty question. So if you've already received the EIDL loan, is there any advantage to also applying for a PPP loan? And do they have
Absolutely.
the same spending parameters?
No, not at all. I mean, some are similar, but first of all, the EIDL is a loan. And so that has to be repaid, whereas the PPP can potentially be 100% forgiven. You can use the EIDL loan on more things than you can the PPP. The PPP is limited to a small category of expenses. But many people are getting both, and there is a big advantage. You can get a PPP loan and use it for another period of payroll than you use the EIDL period loan for.
Can you think of any best practices for how to navigate using loan funds from both of those loans? If you had both.
If you have them together, you can use the EIDL for accounts payable, for instance. It's a good place to use them. Yeah, you can use really the EIDL for any operating expenses, the only thing you can't do is use it to repay existing long-term debt. You can use it to make payments that were previously scheduled, but you can't just decide to take the money and pay off a mortgage or something like that.
Right. And Marty, just to kind of add on to that, you cannot acquire fixed assets such as equipment or a vehicle or expand your business with the funds.
Thank you.
So you can't use it for like 10% down on commercial real estate?
No. What Eric is alluding to is you're not supposed to use it for growth. It's not a way, you're not supposed to use the funds to grow your business, it's to survive.
Yeah, because that's a good rate, and a lot of the EIDLs that we've seen have a 30-year amortization, so that makes that payment quite small. So it's a very good loan, very good terms. Somebody on here wants the easy form qualifier screen to be shown again. I don't know if we can do that, or maybe if we want to direct them to our site after it. If we can bring that up again, I can ask another question while we're doing it.
Yeah, I've got it up, Eric, so you can.
Okay. Okay, thank you. So next one, if you're an independent contractor, a carpenter, general contractor, and you took out a $10,000 PPP loan, how do you say that you use the money for your own wages? Good question.
Yeah, so certain, right, you're a sole proprietor, assuming you file on a Schedule C, right, on your individual tax return.
That's what I'm going to assume, right, Jordan?
Yeah. So you're limited, right, to either your 2019 equivalent compensation, or that full cap, which was the 20,833 for a 24-week period, and it's the 15,385 for the 8-week period, right? So he's at the 10,000, assuming he had a 2019 equivalent compensation of at least 10,000, he would be, fully forgiven on those funds.
Yeah, and just kind of to add on to that, Jordan, I think what it is with people like that, we've had that question a few times when during the weeks dealing with businesses is, they're not on payroll.
Mm-hmm.
And so when they apply for the forgiveness, I think it's just the formula. It is whatever the number is. You don't have to supply any additional documentation. Is that correct, I think?
Yeah, that's the way I understand it as well. Probably the proof they're going to want to see, right, is a copy of your 2019 tax return, right, showing that you're not above that amount. That's
right, which they should have had when for the application and
yeah,
when it was originated. Right. Okay, great.
Yep.
So follow on to that question in terms of owner operators or sole props with paying themselves through PPP. It doesn't really matter. Let's say they're on the 8-week covered period. Doesn't matter if they show or document owner draws over 8 weeks in equal amounts from that 10,000, or it doesn't really matter, right? Because it's just formulaic in terms of how the forgiveness is treated for that owner operator, right?
Yeah, that's the way I understand. They're kind of in a unique category. I don't know of a specific provision or IFR that specifies that it has to be equal prorated payments, over the full covered period. Not specifically for their situation.
Okay, yeah, helpful.
See, here's another one. Go ahead, Noah.
Well, I was just going to go back to someone wanted to see the qualifiers for the easy form. In general, can you talk about, Jordan, the differences between the easy form versus the full meal deal forgiveness application?
Yeah, the long form, right? There's a lot more calculations involved, and it's a more robust form to complete, as well as likely the full support that you'll need to give your lender to show forgiveness, right? Whereas you have 3 requirements that you need to meet, one of them to file the easy. And again, right, it's whether you're self-employed, an independent contractor, sole prop, without any employees, right? So that's that simple situation we just discussed. Or in general, there's no reductions in wages more than 25% during the covered period, and the headcount didn't decrease. Again, there's a question about headcount didn't decrease. Yeah, that's getting at the same FTE that we're trying to capture. Right? If you had 10 employees before and you have 10 during your covered period, at the end of your covered period, then you would be considered to have your headcount not decrease. And then further, the business experienced reductions specific to COVID. This is, restaurants, right? A bunch of restaurants, bars, gyms were required to close during the quarantine time, right? So that would be a good example of a business that, was had reductions in activity specific to COVID-19 requirements by their state and or county level.
The basic difference between the two really is one assumes that there isn't going to be any pro rata reduction of the loan.
Yeah.
And the other one is the long form is used for people who might have a pro rata reduction of loan forgiveness.
Mm-hmm.
Okay, thanks for specifying that.
Okay, another question. The client received a PPP for the 8 weeks. Their dollars have run out. 100% were used on payroll, but they're not yet back to, I think they mean 100% of revenue. Can or should they apply for another PPP or increase the loan amount? Marty, do you want to take that one?
Yeah, I'll take that. So, and unless there's something in the law that just got passed by Congress about a new PPP, you can't get 2 PPP loans, nor can you increase the amount of the one you have unless there's a change in the new legislation that's about to be signed.
Okay, good. Thanks, Marty.
Another question about the easy form. on the second qualifier on that sheet, qualifier to use the easy form, it speaks, it relates to head count. It says if head count didn't decrease, could that mean that you got your FTE back up? So even if you did lay people off and you get your FTE back up by the time period, the covered time period when it's up, so no one got cut in their hourly wage, you could use the easy form in that case?
Yeah, I would interpret it that way. So basically there's three things you can check on the easy form. One is you're self-employed. You check that, you're good to go. Or you're an independent contractor or sole prop. Two is you didn't reduce the hourly wages of your employees by more than 20%. And you also didn't reduce the number of employees. Let's say you didn't reduce your wages by more than 25%, but you did reduce the employees. Then you can go to the third check, which says that if you weren't able to operate because of health guidances, so on and so forth, then you're good to go. So it's that third one is a safe harbor for people who did reduce the number of employees, but were forced to do so by health directives.
Okay. And let's say that they had to reduce the number of employees, but brought them all back and they're fully back in reinstated, and they restored their FTE. Wouldn't that qualify for the easy form?
Well, I'm not sure. If they, you'd have to sort of look, I guess, let me say. That form doesn't specifically bring that in, it looks like. I would take a close look at both the instructions for that form and the longer one.
Okay.
Here's another question. Oh, go ahead.
I was just going to say, Jordan, would you have anything to add to that?
No, I mean, I think, like you said, right, it's not specifically laid out, in those instructions, and I wouldn't want to make assumptions on which way to go. Right, there's the potential, right, that you could, but it would just depends on more exact facts and circumstances, I guess.
Yeah, it's tough for all of us involved in this to make interpretations, right, on scenarios that aren't cut and dry, black or white, when we look at some of these questions, because this is all new and we don't really know, and we don't want to misinform someone, right? So it's tough.
Another question, it's regarding the PPP application, and it has a question on there. Has the applicant received an SBA EIDL loan between January 31st, 2020 and April 3rd, 2020? If yes, provide details on a separate sheet. Addendum B. The question, what happens if the EIDL was received after April 3rd?
I would have a look at the instructions literally. So
yeah, this could be Marty. It could be kind of maybe an EIDL, maybe just the advance. What do they do? Or maybe it could just be the EIDL loan that was maybe used for payroll, maybe not. So it could go a few different ways. But there's been a lot of confusion on this one, I think.
They originally put that language in my opinion, because the EIDL program started before the PPP. So they were trying to pick up the people who got EIDLs before the PPP got rolling. And I think that's why the language was put in there. So if you see something on a form that's telling you to report an EIDL loan that you got between 2 dates, and you got your EIDL loan after that date, then I don't think you need to report it. But again,
that sounds pretty good. Yeah, and you're right, Marty. When the PPP broke on April 3rd, I believe it was, many businesses received those some 4 or 5 weeks before their EIDL loan was approved. So there's a pretty big discrepancy in that time frame. And yeah, thank you.
I've got a question here that I think may relate to safe harbor. So somebody, they run an employment training program for people with disabilities funded through ODDS. They have employees that were counted as part of their 2019 payroll calculations, and those employees have not yet been cleared to return to work. So they want to know, how do they allow for the loss of those FTEs in their payroll? Does that fall under the safe harbor for not being able to operate due to COVID-19?
I would speculate it might, but just a reminder, right? You get to choose your base period, which is essentially your base FTE count. You get to pick the period that's most beneficial to you, which is either February 19th of 19 through June 30th of 19, or January 1 of 2020 through February 29 of 2020. So, there's potential that you wouldn't even have to factor in those 2019 employees. You could take the beginning portion of the year if that's more beneficial. So that's a consideration as well.
Okay.
Here's a good question. If I use an idle on eligible expenses and that helps me generate positive net income and cash flow, can I then use that free or that additional cash flow for any business need, loan reduction, asset purchase, that type of thing? I think what they're asking is, so if I get the idle and I can document all legitimate payroll expenses and utility, rent, whatever it is, all that's fine. But as a result, my cash flow increases, so then I can go buy some stuff. Is that okay?
Yes.
That's what I like. One-word answers. I like it.
Well, the SBA is not going to tell you how to spend your free cash flow.
Yeah.
Right. It makes sense.
I got a quick question for qualified expenses. So some of us thought that workers' comp insurance might be covered under covered expenses. We know that healthcare premiums are. Any idea about workers' comp insurance?
I've heard it varies by state and how the state operates that. I know the Oregon Workers Benefit Fund, and I apologize, I don't remember the exact wording of the reason why, but Oregon's Workers Benefit Fund does qualify counts as qualified payroll costs. But there's some states, it's depending on how it's set up. There's some states where their Workers Benefit Fund or unemployment is not eligible. It is for Oregon.
Nice.
Another question regarding the easy form. If a headcount reduction is from folks leaving from other jobs, can the easy form be used?
Marty, are you aware of a situation like that? I know there's safe harbor provisions, right? And they talk about professional firms, right? Where you're not able to bring back employees. There's a lack of availability, for like a medical clinic. They laid everyone off for elective surgeries and they're not able to bring all their nurses back on. Maybe they got hired elsewhere. But I'm not sure off the top of my head of a situation such as that.
No, I'm not either.
So there's a question here about the idle advance being subtracted from the forgiven amount. They were wondering about the easy form and doesn't seem to have a place on the form to subtract the idle advance from the forgiveness amount. I'm just going to point out that on the easy form, in the top section of the form, there's a form field for idle application number and idle advance amount. So my guess is that by filling out those form fields, that information is submitted to the lender and they're going to factor that into the forgiveness calculations. Does that sound correct?
It makes sense. Yeah.
Yeah. Okay.
Again, I would, if you see a form and it's literal and you're following the literal interpretation of the form or the instructions, I think you're in good shape. If it turns out that the people who wrote the form made a mistake, and then there's been a lot of them, then that's not necessarily your problem. Now, it doesn't mean they won't come back and make an adjustment at some point or change the form again, but just follow the instructions.
God forbid any more changes to these forms.
Yeah, I wouldn't bet on it.
Yeah.
We could do an over-under on it. The question regarding wages. Wages, is that just the hourly rate? In other words, if they got less hours and therefore brought home less, does that mean that there's a reduction in wages? Can you address that, Jordan?
So, sorry, can you say that one more time?
Sure. I think they're asking, are you talking wages, just wages, or is it the hourly rate? So if they had an hourly rate, if they got less hours and therefore brought home less, does that mean they have a reduction in wages?
Yeah, right there. They want to know gross wages. So, it's by payroll, by, however you want to capture it. If it's hourly rate, even salaried employees can be assigned an hourly rate, but ultimately you're looking at the gross amount, right? So it's
right, and I think they don't go back to what it was, the February 15th pay period or something like that, as to determine what those wages, to compare if you had a reduction or not, I believe.
Yeah, that's correct.
Yeah.
Here's an interesting question for a CPA. Would any loan that is forgiven, would that amount be taxable on a tax return?
Great question. And
we can dig into the details there.
Yeah, we're waiting. That's one of the big clarifications we're waiting on, right? Like I briefly mentioned, right, in the slides there, that we're waiting to see how they handle forgiven funds. We know it's not going to be considered income, right? Usually cancellation of debt is considered income in tax law, but they specifically excluded PPP forgiveness from that debt cancellation income. But we don't yet know if the use of those forgiven funds for qualified payroll costs, if those costs will be deductible, right? We're still waiting on clarification.
Or any PPP funds, how they're allocated in terms of on any uses that would normally be deductible. Because, right, isn't that the thing, that any funds that you get from PPP and use on things that would normally be deductible, in this case now aren't, right?
Well, we're waiting on clarification on that. It hasn't been made clear that costs related to forgiveness, whether they would be tax deductible or not. It's not been made clear yet.
Any idea?
Here's a question. Go ahead.
Jordan, any idea when IRS might?
They just released, guidance. What was that? About 2 weeks ago, right? Related to the PPFLA. So when they released those, they said that, more additional examples and such would be coming out. So the way this is moving, it could be a few weeks before we get clarification or longer term. But I know it's a question that's, forefront of the program is exactly, for accountants, right? We want to know how that's going to be handled, on a tax return for planning purposes.
Exactly. Okay, great. Thank you.
Here's a question. Are payroll taxes covered? I understand that we cannot use PPP for taxes. And if you could kind of clarify, Jordan, I think there's been a fair amount of confusion. Do you count withholding, or is it gross wages? Do you count FICA or employer paid FICA, state taxes, stuff like that? So if you, sorry to throw all that at you, but if you could address that, please. Yes, of course. If I am capturing the nuances correctly, right? It's gross wages plus the employer's portion of, in the case of Oregon, SUTA, right? The WBF counts for Oregon. But I don't believe the federal tax does. And I apologize, I'm not more clear on that portion, right? But the employees' withholdings that you remit, right? Their tax withholdings from their wages, that's not included in eligible payroll costs. Right. Yeah, I believe that the PPP was talking about, the FICA that's withheld for the employee and the federal and the state, that's fine because as you indicated, your gross wages. But I believe the employer's portion of the FICA, in addition to the employee part, that you cannot count.
So I have a weird scenario regarding independent contractors and eligible payroll that came up the other day. I just thought I'd run it by our presenters. So someone gets the PPP loan, they're using independent contractors to do some work on a project. Those independent contractors are not employees, obviously. And we know that somewhere in the IFR, it says it's pretty clear that independent contractors don't qualify as eligible payroll. So, this person is wondering, in this scenario, what if they hired the independent contractor as a full-time employee? Could they then count payments towards the independent contractor historically as eligible payroll now that they're hired on as FTEs, full-time employees? Any thoughts on that murky situation?
I mean, technically, yeah, right? If they meet the requirements of being considered an actual employee versus an independent contractor, there's specific rules in terms of who's considered an independent contractor, who's an employee. Excuse me, with the most recent tax law passed, the TCJA back at the end of 2017, everybody who was outside sales, they wanted to switch to independent contractors in order to get the qualified business income deduction. So essentially they work for the same company. Rather than be on a W-2, they wanted to be issued a 1099 and capture their own expenses. And that was a heavy audit issue, because if they're still essentially functioning as an employee of that entity, then they would still be considered a W-2 employee. So I would imagine similar circumstances apply, right? If they're still really, they set their own schedule, they do other projects, they're really an independent contractor, in fact, then I wouldn't imagine they could be counted. They couldn't be converted over unless truly they are hired on and treated as a employee. That's a pretty specific designation they have between the two.
So let's say they're hired on, but let's say they're on the 8-week covered period, just to keep it simple. And the first, let's say 6 of those 8 weeks, they're working on that project as an independent contractor. And then, the business owner realizes what they need to do if they want to have qualified payroll for that project. They've got to convert. Well, they're thinking they could convert them to an employee for the last 2 weeks. Would that make the full 8-week period covered as eligible payroll, or just the last 2 weeks?
I would lean towards just the last 2 weeks when they were actually paid wages as a W-2 employee. That's definitely an interesting situation, which I'm sure they'll look at more closely when they look back and audit things like that. But I lean towards it, potentially the 2 weeks being considered, if he meets the requirements of actually being an employee.
Yeah, I don't usually opine on that stuff, but that sounds to me like you could only count the 2 weeks.
Okay. Great.
So,
Thanks for the feedback.
We're coming up on the hour. I'm going to have to scoot off. I'm wondering if we could maybe take one more question and then wrap it up, and then anything we missed, we will add to our FAQ in our bizcenter.org/COVID-19 page. Does that sound good?
Sounds great. Yeah.
So do we have a last question?
Last question, maybe. We were told to put number of employees on our application, 22, but our FTE was only 16 for the period. Which do we have to restore?
Yeah, they're looking at your FTE, right? Your full-time equivalent. So the base period you compare to and the covered period, you're comparing apples to apples. It's both your full-time equivalent. You're not just looking at number of employees during that time.
Right. Perfect. Thanks.
Okay. So there was a question. What was that website address again? I'll just type it in here really quick. It's bizcenter.org/COVID-19.
There's a comment somebody made about the bank I would just like to address real quick.
Go for it.
Somebody said, even if our bank told us to put 22. And the point I want to make there is the banks don't have any special insight on how to do this stuff. They're reading the interpretations just like everybody else is. The vast majority of the bankers who are working on these deals, you know, you just can't rely on what the bank said or didn't say. They're doing their best to interpret these things like everybody else. So if you think the bank, if you read the IFRs and you think the bank is telling you something that's not right, your judgment's just as good as theirs.
Excellent. Thanks, Marty. Noah, any final words before we wrap up?
Just want to thank our presenters. Jordan, Marty, thanks for making the time to join us. And our panelists, Eric, as always, great having you along. And Steve, thank you for driving the ship today. Appreciate it. And everyone who
Can I
attended-
can I give one last answer? Excuse me.
Yeah.
Sorry to do this. No, I think, Marty, I was just looking at the PPP forgiveness application, and what they do, they ask for number of employees at the time of application and at the time of forgiveness. But I think that's probably just a number, and then you get into the FTE. So maybe, hopefully that addresses that question of the 22 employees and the 16 FTE.
There's another question on here about tracking, and I just want to say to businesses who are wondering about what you should be tracking, if you go to the document list, the required documentation in the forgiveness forms and in the instructions, I guess they're in the instructions, there's a pretty good list there in terms of what documents must be submitted to your lender and what documentation you must keep on hand for 6 years for your records. So check that out. Thanks everyone for joining us today. We appreciate your questions.
Thanks, everyone. Take care.
Thank you.
Thanks.
Thank you. Bye.
Bye-bye.